Okay, well, good day, everybody. This is Jonathan Kleinjan, Director of Crop Testing, and part of the webinar today. I'm going to talk a little bit about the 2020 oat variety trials, and we'll just go to the next slide here. My webinar outline for today. We'll just go through the variety review, and the oat trial is fairly small compared to the wheat trial, so there won't be a lot to go through there. And then I thought I'd talk about a little bit about management. So crown rust is the biggest pathogen problem that we have in oats in South Dakota, and then some other management considerations for growing oats. It seems like oat acres are on the increase in South Dakota, and with that, we've had a few more questions on exactly how to grow oats, as it seems like that knowledge has been, I shouldn't say lost over the years, but we just have a whole new generation of producers that are growing oats that are not familiar with it. So, like I said, we'll walk through the variety trials here. I think I have 14, it's either 12 or 14 varieties that we'll go through, and they're in alphabetical order. So the first one is Antigo. This is the fourth year for this one out of Wisconsin. It's an early maturing oat. You can kind of see it's turning here. These were taken at the Volga Research Farm plots last week, these photos. This is a yellow hulled oat, so you want to keep that in mind. Most oats are white hulled, but we do have a couple of yellows in the trial. Antigo's got very good test weight and good protein content, but yields in South Dakota have only been right around average. So I guess I would not recommend planting this one in South Dakota. Okay, next we have Camden. Camden was released in 2016. This is the fifth year we've seen it. This is from Cantera Seeds out of Winnipeg. Meridian Seeds is their I guess their U.S. marketing brand, so you probably recognize that. High yielding, it's done very well throughout South Dakota. For something that comes out of Canada, I think it's pretty well adapted to South Dakota too. It's got the best overall 3-year average in the central part of the state. One thing to keep in mind for Camden is it's got a very low test weight, so if you're concerned about test weight, this would be one to stay away from. However, good adaptation to South Dakota for yields. Okay, moving on, we have Dion. Dion's from the University of Minnesota, was released in 2013. A little bit of a taller variety, good choice for forage. And I will say Dion is probably still one that that's probably still the one to beat for yield. It's resistant to crown rust. Late maturing, you can kind of see it's still green in this photo, and just overall a very good yielder, consistent yielder. The resistance to crown rust is a big part of the high yield oats in this day and age. Another thing to keep in mind for Dion is it is a yellow hulled oat. So you want to keep that in mind if that's a concern. But otherwise, Dion is a very good oat. Have no trouble recommending this one. Esker 2020 is a new one out of Wisconsin. A little early maturing, you can see here. And this is the first year we've seen it. I don't know much about it. Wisconsin advertises it to be high yielding, but Antigo does not seem to be adapted too well to South Dakota. So I guess we'll see if Esker 2020 is any better. All right, the next one you can pick out in the plots from a mile away, Goliath, just simply due to its height. Very good. This is probably your best choice if you want a forage oat. Just because of the straw production. It also produces very good grain yields. However, you want to be very wary of lodging. So it's a good, I think in 2019, Melanie did a forage study and we had 5 tons per acre dry matter with Goliath. So very good forage producer. Okay, moving on, we have Hayden. Hayden can kick out some very high yields. In fact, a lot of times it will out yield Dion if there's no crown rust in the area. However, you will want to use a fungicide on Hayden because it is moderately susceptible to crown rust. So keep the flag leaf clean, and also a good choice for forage. In fact, the yields were pretty close to Goliath for forage. So just a good dual purpose oat variety here. Like I said, strong yielder, but you will want to use fungicide. I have no trouble recommending this one, basically statewide in South Dakota. Okay, next we have a new one from Minnesota, MN Pearl. We did see it last year as an experimental line. It did very well. It kind of reminds me of Dion a little bit. It's resistant to crown rust and had very good grain yields in 2019 in the trials. So this one looks to be good. I don't like to recommend a variety after just 1 year. I like to see at least 2 years, and even 3 years is better, but this one shows a lot of promise. Okay, then we have Natty. Natty was released from South Dakota 2014, the same year as Hayden, but it's a little bit of a different animal. I'd say it doesn't quite have the yield potential that Hayden does. Maybe a little bit better crown rust resistance, but you still want to use a fungicide in the eastern part of the state and maybe central where crown rust is a concern. Earlier maturity than Hayden, although it doesn't look like it compared to the plot this year. A little bit shorter. And you know, it's going to yield probably within 5 or 10 bushels of Hayden, and it seems like this one probably does a little bit better in western South Dakota. So moving on, Rushmore is the newest one from South Dakota. This was released last fall from our release committee, and very good yields, best forage yields in the trial. Melanie put on 5.4 tons dry matter per acre in 2019. So even though it's not as tall as Goliath, it out yielded in the forage last year. So statewide in the CPT over 3 years, it is second, I believe 5th and 6th in eastern, central, and western locations. So very well adapted, probably slightly more to the east, but pretty good statewide. So this is an exciting new one to try from SDSU. Oh, and I should mention, I'll back up, Rushmore is resistant to crown rust. All the new material coming out of SDSU is resistant to crown rust. So Saddle was released from SDSU in 2017. So we've seen that for a while. It's resistant to crown rust, but it's starting to show some susceptibility to barley yellow dwarf. It ranks 5th for 3-year yields in eastern South Dakota, but it's not recommended for central and western South Dakota. So a little bit smaller area of adaptation, but a good choice for eastern growers. All right, moving on, Shelby 427. This is the oldest material we have in the trial. We dropped quite a few this year just to try to keep up with the newer varieties. This was developed in 2009 and released from South Dakota State. We just keep this one in there basically to see the difference between older and newer genetics. So this one has not had good yield performance. In fact, 3-year yields are near the bottom throughout the state. So this one, I wouldn't really recommend planting this one anymore. Okay, the final one we have is Warrior, and Warrior is good 3-year yield averages. This one was released from South Dakota in 2018, so 2 years old. And also resistant to crown rust, slightly later in maturity. And I guess we released it and named it Warrior because of its high yields. Melanie called it a yield warrior. Probably better adapted to eastern and central South Dakota, though probably not highly recommended for the west. So Rushmore would probably be a better choice out there. But strong yield performance, this one will usually typically be toward the top of the trials in the eastern and central part of the state. Melanie has a couple experimental lines that are on tap for potential release this fall. We'll see how they hold together. Yield data should start coming in a couple of weeks here. Winter wheat, we started harvest this week, so once the winter wheat is out of the way, I'll get to work on the oats in the spring wheat. So for further information, we do have some document boxes and signs posted at various locations throughout the state. You can see here Aberdeen, Miller, Peter, Selby, South Shore, Wall, and Winter. If you want to visit those, you can walk through the plots. There's a handout there. Also, if you visit the website, well, you have to visit the website to find the location of each of these trials, and there's the web address there. And the handout is also on the web, so if you want to print out the handout and then go back through this webinar, you'll have that to follow along with as well. And I did not put the link to the yield results on here. I didn't want to cause confusion, but like I said, those should be coming up. It'll probably be about a month yet before I have any of the oat data up. Okay, the last couple things I want to talk about first is crown rust. Those of you that are new to oat production or are relearning oat production, crown rust is a terrible pathogen. I've seen it basically reduce plots down to nothing. If you look at the picture on the right here, this is a plot of horsepower, which was extremely susceptible to crown rust. I've seen it so bad that basically it doesn't even, you don't even get your seed back out of it. Typically in the susceptible lines, you will see up 50 to 60 bushel response to fungicide, and you have to get that on at flag leaf to keep that flag leaf clean. If you see the rust showing up, it's likely too late already. And here's just a picture showing the difference between fungicide treatment and untreated. So we have Stratego at flag leaf on horsepower to the left and untreated to the right. So even that plot to the left is still going to suffer some, but look at the difference there just applying a fungicide. And finally, variety selection. We have DN on the left here, which was one of the first locally adapted resistant varieties, and then horsepower on the right, which is one of the most susceptible to crown rust. So we are doing a fungicide versus no fungicide trial in Volga this year, so we can see if there is any response to fungicide on the resistant varieties as well. But I guess if I was going to grow oats, crown rust resistance is one of the first things I would look for. Just why chance it trying to get your fungicide timed right. And then finally, Dr. David Karki's been doing some research on oat production the last couple of years. And I talked to some growers out in the central part of the state that are starting to get back into oats, and they are putting a growth regulator on. So here's a picture from David Karki. If you look in the front, you can see how lodged those plots are. And then behind the pink flag, you can just kind of see it there, kind of in the left central part of the picture. There was growth regulator applied to that at about VIX 6 or jointing stage. So you can look how much, you can't really see a height difference in this picture, but you can see how much better the plants with the growth regulator applied are standing up. And lodging can be a significant yield reducer. So growth regulator, I believe the rate for Palisade is about 12 ounces per acre. And you want to apply it, you don't want to put it on with the herbicide, like you're tillering your VIX 4, because it doesn't seem to work as well. You're probably going to have to make a separate application later on at about VIX 6 to 7 for jointing stage. It works a lot better at that point in time. And finally, how much nitrogen should we put on oats? I just put this chart up from David Karki, and look at that yield response. Basically, plots with 0 applied soil nitrogen yielded roughly the same at these 3 sites, then the same as 140 pounds. There was a little bit of response at the Salem location. It looks like about 60 pounds of N was the optimal rate there. You typically don't need a lot of oats or a lot of nitrogen to grow oats. In fact, you want to control it as much as you can, keep the rates down so you avoid lodging concerns. The rule of thumb is about 0.7 to 0.9 pounds of N per bushel of yield. I would say you could probably even get by with like 0.6 most times. The more stressful growing conditions you have, the more nitrogen you're going to need. But talking to the Canadians who grow a lot of oats up there, they basically say that 90 pounds of nitrogen an acre is likely enough. If you figure your goal is 150 bushels of oats, that would be about 0.6 pounds of N per acre. And if you have better soil, obviously you can get by with that 0.6. But as you have lighter soil or more stressful growing conditions, you probably want to lean more towards that 0.9. David and I talked about doing a study in coming years, looking at timing, split applications of N. So we'll see if we can get that grant put together and funded to do that down the road. I guess with that, that is what I have for you today. Here's a slide with my contact information. If there's any questions, feel free to reach me. my office number forwards to my cell phone, so I will be able to, if you call that number, I'll answer. And we have my email address up there, and I post some things on the Facebook and Twitter handles for the extension crops.
Oh, I'm Jack Davis, a crops business management field specialist out of the Mitchell office. So we're going to do a 2020 mid-season checkup, take a look at prices a little bit and outlook for crop, take a look at volatility throughout in what's happened this year, comparing stock market to grain prices a little bit and how they have changed. And we'll just get at it here. And why do I not page down? For some reason, I've lost control of my slides. There we go. They're just slow. So I just put through a contact information right up here to start with. Email's probably the easiest at this time. And of course, we get messages through the phone too. So anyway, it's fine. Okay, so we're looking at the change in stock market and West Texas oil price. And compared back to January 1st, a weekly price, and looking just as we hit through the virus scare starting here at the end of February, and then of course through its peak maybe of the scary part, oil has rebounded, you know, almost half of what its drop was initially. And the S&P is pretty close. It's only about 1% below what it was back in January. So stock market wise, it has come back fairly well. Doing the same thing with a couple of the different grains, showing winter wheat in the darker line. If I can get my clicker to show here. That's probably right around 11% drop. And, you know, right into the scare, it held fairly good. Of course, took a dip there, but coming out of it held fairly good. Now we're probably just as much harvest pressure as it is the virus scare. Kind of the same thing on spring wheat too. And of course, recently we've seen some rises in the wheat. Here again, S&P, and then the soybeans. Soybeans being our green line. They are right at 6% below what they were back in January. And corn is right at 17% off of its peak from back in January. And corn really got hit hard through this virus scare, almost losing 30% of its value. And a lot of that's due to, well, of course, our ethanol and lack of travel. Ethanol margins really got hit as oil had kind of a double whammy with the increase in production between Russia and OPEC, pushing out more production, and then we got the virus scare and limited travel, not just in the United States, but worldwide. So really a decrease in oil use. But ethanol has come back pretty good. They've risen in production for 11 weeks straight, so that is helpful. It's probably starting to stabilize a little bit. It's still going to be off 10 to 15% from last year probably, but it has come back from what it was in the middle of our virus scare. This is called the VIX Index. It's a volatility index, and it's nicknamed the Fear Index. It's on the S&P 500, and just wanted to show it because it's a good indicator of if people are willing to invest in if they're pulling their money out. So it's a measure of volatility, and we can see here how it really spiked. So it jumped up to almost 70 and then kind of settled back down, took another jump, but still above that 30 level, which is a larger volatility. If we look back I went back to in early 19, So seeing how much more stable and not as much volatility, uncertainty out there, and we realized what prices were at that time and how things were looking more positive. And of course, then we got a virus scare, and it has stayed fairly high since then. So this is Monday's crop progress report. Switching up here a little bit, the top is going to show the United States as a whole, and we're on the red line for this year, and then comparing the most recent years. So looking here, we've dipped a little bit, but still really pretty good. You know, we're up in that 68% good to excellent, which is pretty good coming into July. And now, of course, our progress, we're just really in the middle of pollination, and these next week or so will be key. You know, some may be ahead of that, some behind it a little bit, but still the next few weeks will be key to that corn crop. And the market evidently is figuring that it's pretty well made, because they had the rally for the weather early after our June report, and then we had that heat coming into July, and kind of had our weather rally there early. And then same thing, looking at soybeans. On the top is the national level, still pretty good, good to excellent. Recent drops, and we'll just see how that carries through, and what our weather. So market is really keen on weather, and it'll be pretty volatile going through the next few weeks. And of course, August is our key month for soybeans. It does kind of hang around with corn, but the key to making the crop is probably more so in August. Just a quick one to show temp outlook is still calling for hot, but they know they've called maybe more for normal rains. Over on the right-hand side, more normal rains through much of the growing region. And maybe the heat locally is not going to be quite as tough as what was anticipated or is forecast out to the 8 to 14 day. So we'll see how that plays out. I just wanted to also show a drought monitor. You know, Nebraska is third largest. We'll see as we go forward how they pollinated or came through their pollination. There are some dry spots. Of course, irrigation helps with that, so the heat would be the stress factor through there. And also then down into Kansas, heat could be a stress factor. Kansas, not quite a big as player in the corn or soybean market, but still could have an impact. And then kind of a pocket in Iowa, South Dakota, we probably had enough moisture to kind of carry us through. If we don't get too carried away in heat and get a little timely rain, crop will be good. Indiana's got a spot that's a little bit tough, and they may be stressed some too. So switching up, just wanted to show a technical indicator, one that can be used. You don't want to use one by itself, but I'm only going to show this one today. You'd want to use another trend setter or another chart, and also along with fundamentals to make your marketing decisions. And I went back to January of 19, so going out quite a ways, and that's always sometimes tough to sell that far out. But it may be what people have to do or get used to doing to work through these low margin times. Because we had a chance, and I know it's a lot easier for me to be on this video and say it, to sell some of this 2020 corn back in when we were planting or getting ready to plant 2019. Now it's pretty tough to look out that far ahead, but it may be worth or time to kind of get that in your playbook for marketing. And what the Bollinger Bands do, it takes a moving average, which is the middle here, and I just picked 66-day moving average, and then it goes deviations on each side of that. So standard deviation, and we use 2.5 on this one. And then once it pops up above that would be somewhat of a sell signal. And that, along with other indicators, would indicate to sell. So we had that for this 20 crop clear back last year. And again, I'll say it'd be really tough to maybe do that, but most guys know kind of where many of their prices are, even that far out. So it doesn't hurt to go ahead and just get a little bit on the books. Not saying that you'd sell 50% of it that early, but you could do a little bit. And then we didn't have much for sell signals going forward, and we did get one here recently with our pop that came with our weather scare just here a week or so ago. Kind of same thing, soybean wise. Then when it gets real wide, when the volatility gets real wide, it maybe isn't quite as good an indicator on when to sell, but so you might want to use something else at that point. But when it's in that narrower trading range, it does give you some decent signals to maybe get a little sold. And I'd say really the key is to spread sales out, know what you want to sell off of the combine, know what you're willing to store, and work with a good advisor on getting your work done that meets your cash flow needs. That's really the key. So switch up a little bit. You're going to look at some financial information, a few slides here. And what I do is I take this information from University of Minnesota, and if it doesn't say, I'm using all farms that are in it, and I pick the farms that are in North Dakota, South Dakota, Minnesota, and Nebraska. So I just use these 4 states. And we've got a lot going on here, but what it's showing, the bars are returns to the operator, so paying for his labor and management, and then also for land. And then the black line going across is cash rent. So seeing that these returns were above our cash rent here early for all these crops, alfalfa, soybeans is red, corn is the yellowish, winter wheat's kind of a blue, spring wheat the brownish, and then of course our land rent. So when we had our run up in prices and the drought added on to that, really pretty good margins. But then probably starting for these farms anyway, they're involved with this, starting in 13, soybeans worked, but corn was really tough. And the margins on corn again, this is all farms though, not sorted for profitability of any sort here on this slide, but all farms. The soybeans and corn, the margins were below what they could support for cash rent. I just wanted to show that there's kind of that pressure on rents, although we still see land values and rents holding. And part of that is the help that we've gotten from the MFP, and just showing it by state for the last couple of years. So 429 million in South Dakota in 2018. And we'll jump forward to 2019, another 402 million to help out what the market wasn't giving us. So we've got, farms have gotten additional revenue through MFP. CFAP is our new one. That's probably adding, maybe $20 an acre or so. That's kind of a tricky one. And then we got another round coming up. We don't know any details on that. I just ran some scenarios for ARC and PLC, and probably anywhere from $10 to $50 per base acre. And I know that's quite a range, but it'll kind of depend on where you're at. And this is for the next 2 years. So we in the fall of 20, we receive 2019's payment, and that'll be on the lower end of that. And then going forward, right now the anticipation is for lower corn, and much of corn has been signed up for PLC. So about that $50 to $60 in in PLC payment for next year, or the crop that we're currently growing now. And that would be in October of 21. Those aren't real fast moving cash flows, but they are out there to kind of be a support. And some may have signed up for Ark County. That would be, people would receive that if they had yield reductions in their counties. So if they didn't, probably not going to get to a point where Ark County pays very much. So I'm going to switch up a little bit here. I narrowed it down a little more, still the same 4 states, but I narrowed it in 1,000 to 2,000 acres of cropland, and I split them by net income. So on a lower level and then the upper level, neither one clear at the bottom or clear at the top. And this is just as we showed, some of the support has been coming in from the government side, and not something that we necessarily want to see as producers, that we have to rely on that. We just soon be in the market and have it down here below 3% as it was in these early years here. But just showing for both of these, it's coming up, 7.5 to almost 9% of gross income is coming from a subsidy payment or a help payment, which is not, it's tough. That just makes it tough to manage when you have to manage through those situations. But I just wanted to highlight that a little bit. Then just showing gross sales for the 2 comparisons. Both grew their gross sales over the last 10 years or 10 seasons. The top end growing it a little bit more than the lower level, but both of them saw an increase in gross sales. And this has kind of been the tough one, is this working capital to gross revenue or working capital situation. And part of that is due to tight margins. People, their working capital has been stressed. And working capital is kind of an ability to pay your current debts, current things that are owed, and keep operating. So making sure that that's in a good position is helpful to farms. And we'd like to see it above that 30% level. The upper level has bounced around that a little bit, but kind of hanging right in there in that 30 to 40%, or at least closer to 40. Where we see on the lower level, and that will lead to financial stress for some of these farms, they've dropped below 30 and even down to 20. So that's just taking that working capital and dividing it by gross sales. That's how that is calculated. And working capital is current assets minus current liabilities. Here, just putting it on a per acre basis. So took their dollar amount divided by the acres that were involved at these farms. And we can see that they were pretty even starting out in this time period back here, and they kind of trended the same. But then as it got tighter, the lower net income one has just continued to fall off on their working capital per acre. So they'll need to make some changes to survive through that. And this upper level has done a fairly good job of keeping it around that $300 to $400 level per acre. Just another way to measure it and track it. This is supposed to say median net farm income. Got a lot going on in this slide, but it's median net farm income by gross income in thousands. So let me help explain that here. So here's their gross income down at the bottom. And this would then be tracking the median net farm income. So here's farms with less than 100,000, farms with 100 to 250,000 in gross, 250 to 500, and then on up and so forth. And then of course, here's their median net farm income. And really what I wanted to show was the divergence as we get in this 250 to 500,000, kind of the more of a commercial type size farm, but yet many in South Dakota would fit this level and above, how the top end, notice the slope in its line going up as it goes up in income, and then as on our bottom end, how they diverge and go down. So just wanted to show that and highlight that there's a point in there at that level that they start to diverge and take a different path. Switching up, land values have held pretty well. There is pressure to do rents, and we are seeing rents come down somewhat, and you would think that maybe land values would fall with that. They're just tending not to for good pieces of ground. So strong soil capabilities, easy access to farming, those pieces of property that are easily farmed and with good soils are really holding their value pretty good. And the key is really interest rates. Before a year or two ago, I was showing this same slide, and I had interest rates on the side going up here rather than down. So this time, I'm going to page back up. Sorry about that. So a year or so ago, I had interest rates going up as we came down here to show then its change in value of the property. So we'll just start at this level with a $62.50 and a $200 rent. So if rent would move to 170 and interest rates or the cap rate stay the same, you would expect its value to fall by about 800 or about 15%. So that's what this is showing. This is the value that it falls to, and then this is the percent that it would fall based off starting out at this point. So showing pressure on rents, but on this slide, then showing that as our interest rates decrease, it's still helping to hold that value in the ground. So that's a part of the explanation of why land values haven't fallen like they did way back in the crisis of the 80s. Just as interest rates have such a huge influence, and capital rates have such a huge influence over the land values. And as we saw that volatility index, people are nervous about investing in stocks. So there's still demand for land as part of an investment portfolio. Another factor that happens is that there's not much land offered. Land it's not needing to be sold. People are willing to take the return that they are receiving on it, and just not a lot of volume offered for sale. So that helps hold it up. Some positives we got going in ag: low, stable interest rates. We would look for interest rates to stay pretty even the next couple of years. Energy costs are not out of line, so they're staying fairly stable. The market volatility, now that can be seen as negative or positive, but it's positive if we can take our base hits off of it. Get our marketing or risk management plan in place to take those or make those base hits when they're offered. Land values have been stable and resilient. That's really been a good thing for those that own some property and helped hold their places together. Generational transfer, people are interested. Young people have come back. They're interested. They're good at managing. They're strong work ethic, and it's really good to see that next generation coming back in. Well, there's always some challenges. The high farm income period of the mid-2000, early 2000 decade, it has slipped away, and we're back to more that 2006 timeframe and before that. What's helped is above trend yields. Now that wasn't the place last year necessarily, but some had it. And then also we had government assisted, and that has helped things. Still got tight cash flows. It's a major challenge for many, but yet our land makes up 83% of our asset value. So having land stay in a strong position has helped that total financial situation. They've pulled back some, the cash rents and land values, but they seem to kind of stabilize, especially with the lower interest rates. The sun always comes up, and it's always good to be involved in production agriculture. Some key things that I always like to leave people with is know your numbers. And that's really helpful in making any type of decision. Know what's making them money and what isn't. Take some time to compare financial ratios. Risk protection. I'm a firm believer in conservation practices, and probably part of that's just of where I've grown up out. A little marginal on lands and weather. Never very far away from a drought. Try and lower top input costs and without cutting yield. If you're into a high cash rent situation, you got to make that tough decision. Can you continue in that, or does it make sense to get out of it and put more into the other grounds that aren't quite as expensive? Of course, capital purchases, guys have been pretty good about reducing those as needed. So there's my contact information, and